ICP finds itself on an edge, a knife edge, the 200-day exponential moving average. If ICP loses this critical area of support, we are likely to see ICP fall even deeper in the price chart. But is that a bad thing, or is that an opportunity to be seized? Hi, welcome back to the channel. My name is Nick, and today we are going to be jumping into the technical analysis on ICP, sharing my thoughts and opinions on where I think the price action is heading. As I get into today's video, smash that like button, guys. I really do appreciate that. If you are new to the channel, why not go ahead and subscribe? Guys, let's kick things off by taking a look at ICP paired up with USDT on the one-day Binance chart. Here you can see, and following on from the previous video, we are still in our downward trend for ICP. We did test out and we almost lost the 200-day exponential moving average yesterday with a low of $11.18.2. Fortunately, we closed at $11.78.9 with that 200-day exponential moving average being $11.48.9. We came very close to closing lower than the 200-day EMA. This is a really dangerous place for ICP to be. If we lose this area, we are likely to see the slippage that I was talking about in the previous video, heading down towards $7 to $8. If we were to see this, I think that is a huge opportunity because the structures that we are seeing in the charts are incredibly corrective, meaning that we're not trending down. Although it might feel that we're losing a lot of ground and we're seeing a lot of percentage drops, for example, this drop here was 49.25, it might make you feel very bearish. However, the structures in which we are seeing here are corrective in their nature, not trend in their nature, basically meaning that this is likely to reverse shortly and we're going to see some pretty exponential gains in my humble opinion. So where next? Well, with this clear rejection from our downward trend line, the rejection on the 50 simple moving average, the daily yellow line here, the blue 50 exponential moving average also being resistance, we are likely to see the price action slipping down quite a bit. Now, I estimated this to be down at this low range, kind of coming in right here between that $7 and $8. Okay, I do think that is where we are likely to kind of see things. Okay, $8.30 approximately. Now, that could be a wick and we still get a closed position above the 200-day exponential moving average. Alternatively, it could be that we actually close down here for a while yet, and then we start to rally back up once we complete this pattern down here. The reason that I don't think we're trending is not that we have the idea of a broken structure with higher lows or higher highs or anything like that. It's to do with Elliott wave theory. Elliott wave theory tells us unless the price action collapses down, let me find this right here, it'd have to collapse down lower than $5.48 for it to be considered a trend. And so I don't see that happening. We do find ourselves with this great area of support at this low end, this low range down here. I'll go ahead and actually put in a little yellow box on this one. I'm going to give it right here. Okay, this support range is $9.52 to $10.91. Okay, now it's possible that we come down just a little bit deeper than the previous swing low for our minimum expectations, so $11.49.4 or lower. Okay, that would allow us to kind of look at a double bottom potential here, or even a triple, quadruple bottom, considering the history of this particular range. That could be bullish, right? So we want to be aware that there's potential here for a reversal from this range. Not all necessarily do we have to go down all the way down to $7 to $8.30, right? We don't have to do that. Minimum expectation will be on the previous swing low. But that being said, I think there is a high probability that we do see some extreme volatility on ICP and we do get rejection. Now, taking a look at our daily stochastic RSI, we've got plenty of room for growth. However, the smaller time frames, the 1 hour, the 4 hour, they're not showing us that kind of same courtesy. They're showing with the potential for us to slip further to the downside. And that could mean that our daily stochastic RSI actually remains in an oversold status for a bit longer, along with the weekly time frame. These two macros, though, are sharing the idea that we have yet to see that next big leg to the upside, and it is on the horizon. So it's a positivity note that essentially we are looking for that next surge upwards. We just are not there yet. So we want to kind of bear all of that in mind. Now, if I take the stochastic RSIs off and throw on the divergence indicator, you can still see here that the RSI, the relative strength index, the yellow line, is lower than the 50 level. Though started to tilt up a little bit, still shows us in bearish territory. There's no divergences indicated though, so we're not too concerned around that. And otherwise, that's actually all looking okay. MACD is printing negatively, but again, this is only showing you what's already happened. So again, not going to be the best indicator to kind of show you what's going on. Now, from a volume point of view, you can see that volumes are, well, they're still low. They're lower than they were before. This gives us confidence. It shows that there isn't a huge amount of selling pressure, but also at the same time, there's not a lot of buying pressure going here either to help push the price to the upside. There's basically just a lack of demand for cryptocurrency assets at the moment, but we've been talking about this for a while on the Discord, on the channel, just because the market in itself isn't really being run from fresh new demand. It's kind of existing crypto investors that are here kind of dabbling around, moving new money in or moving assets around and so forth. And we haven't yet really seen an influx of new investment money outside of the ETFs, of course. So taking a look at where we are potentially going to get ourselves pinched up here with the downward trend line and our 200-day exponential moving average. My expectations will be that we'll find resistance on the trend line or the 50 exponential moving average, come down and lose the 200-day exponential moving average. We'll be looking for keep support between $9.52 to $11.49. If we cannot do that, then unfortunately I do expect us to move down more towards $7 to $8.30 here on the daily time frame. If we throw in the VPVR, okay, let me show you this one right here. You can see that this previous area, okay, between the $9.52 and the $10.91 has a reasonable area of volume historically in it. It shows that this is a great area of support, okay? Coming down to that lower range, you can see that there's an insufficient amount of volume in there, historically speaking, at least from all the candles that are on the chart right now, and that could be a problem. If I zoom out even further, you can see here that there's not a huge amount of volume in here either, and it's actually all aggregated to where we are. Okay, so we want to bear in mind that if we do find slippage here, this area of $7 to $8 is going to be a rough area for ICP's price action as well. Okay, turn that off and throw on the smart money concepts. We are still in a bullish pattern on the daily time frame. We haven't broken that. Everything here is actually looking okay. Equilibrium does sit higher than the 50 simple moving average, so we want to be a little bit concerned about that barrier there that we've got to push through at some point. But for now, actually, everything here is not too bad. There's a couple of fair value gaps, there's a couple of premium areas and discounted areas indicated on the chart here. So again, you're finding pockets of selling, pockets of buying, and you've got the fair value gaps sitting quite low in the chart, more towards that $7.50. Hopefully we don't have to go down and fill those gaps out, but these fair value gaps that you see here is testament to the fact that there's a lack of volume in those pockets, so we want to be really cautious with that as well. Okay, so nothing there. Let's roll this up into the weekly. If we do move down towards, again, that low range of $7, then we are going to be looking for the next run being somewhere between $53 and $85. And if we do go into that kind of next kind of trend parabolic phase, it'll be $184. The question does become, are we likely to see, ICP rallying back up to those previous numbers that we saw? Are we going to be looking for over $1,000 for ICP? Are we going to be looking for a couple of hundred? You can let me know your thoughts in the comments down below. Personally, I don't think we are likely to see those kind of numbers. I think we're likely to see, upwards towards the $100 range, maybe push a little bit more if we're lucky. But I don't think we're going to see those kind of numbers that we saw from the launch that we had way back. You can let me know in the comments below what your price predictions are for ICP. I think mine are going to be really conservative, between that 50 and 100, or more specifically 53 to 85. You can let me know your thoughts on that in the comments below. And if you haven't done so already, guys, you should probably check out this video right here where we're discussing what's going on with Cardano's ADA.